Hi everyone, I'm David Armstrong, Executive Director of Content at wealthmanagement.com. We're here at the RA Wealth Management Edge Conference in Boca Raton, Florida. I'm with Peter Mallouk, the CEO of Creative Planning. Peter, thanks very much for joining us.
Yeah, good to be with you.
You just got off the stage for a Q&A with our reporter Alex Ortolani and talked a lot about growth. And this is a conference that's dedicated to RIA growth. We're trying to give advisors a forum to discuss amongst themselves and learn about how to grow their firms. You've obviously grown Creative Planning into one of the largest RIAs in the country. I think Creative Planning is known as a firm that's grown, recently anyway, by M&A. However, the first how many years of Creative Planning, it was all organic growth?
Yeah, over 10 years, just organic growth.
So no acquisitions whatsoever.
That's right.
You went from what to what in those?
30 million to, I think it was 12 or 15 billion or so.
Organically?
Organically, yeah.
So what's the secret there? I know client referrals important, client service important, but what do most advisors then get wrong about organic growth?
Well, I think it's very easy to have a happy client, right? The retention rates at a very, very poorly run firm will be over 90%, and a great firm will be 97, 98, 99%, and there's the whole spectrum in between. But there's a big leap from a client that's perfectly content to one that is willing to advocate for you. And I think that a big part of Creative Planning success has been client advocacy. You know, this month, the number one source of new clients by an extremely wide margin was client referrals, and that's been the same month after month after month after month after month. And so I think that's the key to a healthy organization. It tells you your clients are happy and satisfied. And so it's the number one thing that I look at. So that's been a very, very big part of our growth before M&A, and even after M&A, it's a bigger part of our growth is the client referrals.
You spoke earlier about the M&A portion of what you do and how maybe the firms that you were looking to add to the Creative Planning organization, maybe that's evolved a little bit. You know, the lens by which you look at other RIAs to join. I mean, I'm sure early on it was, you know, is it a good cultural fit? Do we like them? Now, is there something that's a little different about the firms that you're looking for?
Well, I mean, in the beginning when we were doing an acquisition, like even when we really started doing acquisitions, we were about maybe 70 billion when we got serious about it. And there, the whole country was an open canvas. We had advisors that we had hired that had grown at Creative Planning in maybe 40, 50 cities. But it might have been one or two people. And so literally an acquisition made sense anywhere if they matched philosophically, were a cultural fit, everything aligned. So that created a lot of opportunity. Well, now we have a significant presence in a lot of different places. And so we need to have the cultural fit, the philosophical match, be totally independent, and in an area where we actually have a need, right? And so that is really, really narrowed. I mean, I might talk to 150 to 300 firms this year, and we might do wind up acquiring 2 or 3% of those.
Yeah, that's a small percentage.
Narrow.
Narrow filter. You also spoke about, and I think we mentioned this on a podcast that we did together as well, you are the CEO of an organization that's 3,000 employees or so?
That's right.
Yet you spend well north of 50%, maybe even 75% of your time with clients and prospects. Yes. How does that work?
Well, I think that working with clients and prospects is a competitive advantage, and I like the player coach model. As I started out as a tax and estate attorney and certified financial planner, and so I really understood the things that we're doing, and I enjoy it too. So part of it's I enjoy it, but if I'm sitting with a prospective client as I was yesterday, or I'm sitting with a client as I was yesterday, and you're doing that every single day, what happens is when I'm talking to you, or when I'm on CNBC or Fox Business, or when I'm on my podcast, I don't need to prepare, right? I know exactly what the clients are thinking about, what prospects are thinking about, what they're talking about investment-wise, planning-wise, what's on their minds. And so I'm hearing it live. It doesn't have to work its way up to me. So it allows me to be more knowledgeable. It also lets me experience what the team has experienced. Like, hey, why does the note-taking software say this? Let's fix that. Or on the investment statement, I see this. Let's fix that. And when I'm talking to advisors about, hey, I saw this and I wanted to share this knowledge with everybody, I have some credibility because they know if they're getting yelled out about a certain investment, I am too. And if a certain investment's doing great, I'm hearing about it too. And so I know I have this day-to-day pulse on what the client and prospect is thinking. And the whole organization is about fulfilling the needs of the client and the prospect. And then that aligns me with the whole team. And so to me, this is an enormous, I like doing it, but it's also an enormous advantage in terms of saying, well, this is what we should be doing now.
And also you're using the tools that your advisors are using, and you can
That's
see
right.
when something breaks down, you know it immediately.
Excellent point.
Yeah.
Yes, I mean, I'm very in tune with, like if I wasn't doing it and advisors go, oh, this is tough, and say an IT team said, oh, it's not that big a deal. Well, if I'm an advisor, I know it's a big deal or not, right? And so it really helps using everything that they're using.
Yeah, that's fantastic. We talked a little bit about technology up there, obviously a big topic at this conference, AI, how AI is both perhaps an enabler of efficiency and perhaps also a competitor. Where do you fall down on that?
Well, I think AI is going to be both an enabler and a competitor. I think right now we're seeing the enabler part. We're seeing people go, how am I going to use this, and what's worth investing in it? And I'll use it to take notes, or I'll use it for this shortcut to get this solution for, I'm going to help prepare a tax return or a legal document or a financial plan with it. So you're going to see some efficiency, ideally, improvement in accuracy, ideally. You take a team of 10 people, you keep all 10 people, but you're able to do more without adding more work. That's what I think we're going to see early on, but then we're going to see AI become a competitor, as it will with almost every space that involves advice. And I think that's the great unknown in the industry, is will the enablement part offset the competitive part? And capitalism is going to answer that question for us.
Yeah, interesting. Speaking of capitalism, the rumors swirl about the exit strategy for your investors and your employee owners. What does that exit strategy look like? We talked a little bit about the inevitability of an IPO at some point, either for you or someone else.
Yeah, for someone else, ideally.
Yeah,
right.
How do you feel about the?
So, I look at it like I don't feel this pressure to do that. I don't think there's anything wrong with being a publicly traded company, but I have clients that are CEOs and CFOs of publicly traded companies, and they're not particularly happy. They usually don't enjoy their lives very much there. So I'm not dying to do that. I think we've shown that every year we've continued to expand our employee base of partners, over 1,000 partners, and we've also shown that we can retain majority control, and we've shown that our PE partners can exit without a public event. We saw General Atlantic sold part of their position to TPG, and to me, this is working great, and it's worked for a decade, and I hope it'll work for another decade.
Okay. I do want to jump around maybe a little bit, going back to the growth topic. One of the strategies that we see a lot of advisors at some of the larger RIAs try to adopt is this convergence between retirement planning, corporate advice for executives, C-suite executives, employees, and how they use that as a kind of a way to harvest clients over onto the wealth management side. This is something you've dipped your toes into, you see that. A lot of advisors are saying that it has mixed results. How do you feel about this convergence between retirement and wealth?
So I don't believe that there's a firm that has really done this well yet. And there's firms that are strong in the retirement space. There's firms that are strong in the wealth space. But I think that the reason we haven't seen the success is there hasn't really been someone strong in both of them. And I think we're attempting to do that right now, to be the leader in each of those spaces. And we are starting to see some very strong success. And I think that within a couple of years, this might be the single biggest opportunity for us to meet so many people, these prospective clients, and convert them to clients. And I think, stay tuned, but I'm very optimistic about how this is going to end up over the next couple of years.
Okay, well that's fantastic. Peter, thanks very much for joining us at the conference. I appreciate it.
Thank you.
Thank you. And thank you for watching.